Philippe Darvizonnet. He's Global Chief Economist at BNP Paribas, and he joins me now. Philippe, thank you so much for joining us. I was interested in your comments about what Mr. Rubini was saying, because he is really known as Mr. Doom and Gloom, so it's very rare that he says, yes, it's bright and the future is looking more exciting. But do you think that actually we have a perfect storm brewing? Because wherever you look in the region, in the world, there's something wrong going in each region, and it's different things.
Well, it's very easy to make a list. I know very well Mr. Rubini is an old friend, but you take a list, what happens in the US, what happens in Japan, which was a surprise, obviously. China is slowing down. Yes, they do everything they can for that because they fear a wave of inflation. Yeah. So it's easy to make a list. It's easy to bet that all things will go together in 2.5 years from now. And you know things happen from time to time. You have a recovery. It's now 2 years old. Add 3 years to that. And obviously the cycle goes down.
But if you look at China, for example, if it's slowing and it's slowing in a good manner, at least we avoid a hard landing. So that has to be a good thing.
I mean, they had to fight two things. One, a bubble in the real estate was eating up. Yeah. Huge. And second, you know, these countries, emerging markets, they have a huge weight of food in their price indices, and consequently an increase because of speculation or fundamentals, maybe draft or whatever, has an impact on social and political situation in these countries. So they fight this. It's not a surprise. That said, you see all emerging markets, they are increasing their reserve ratios, they are increasing the interest rates. As of today, these interest rates are still very low when compared to nominal GDP, meaning that monetary policy is still accommodative. So yes, a slowdown would be welcome. Nobody is forecasting that China growth will go to 2% next year.
Of course.
Okay.
Philippe, does it mean that actually with the fiscal problems in the United States, of course what we're seeing in China and Japan, Europe's troubles can be, I mean, I wouldn't say overlooked because they're still huge, but seem a little bit more tempered than they were maybe just 6-7 months ago?
Well, I mean, the market do not perceive the US the same way, in the sense that, for instance, when there was a nasty comment about the US fiscal situation by a rating company a few months ago, guess what? Long rates came down because, you know, it's that's a what's a warning, so consequently they will improve, blah, blah, blah. Any other country would have been the contrary, of course. And they are still in a mess regarding that issue because everyone knows something has to be done. They don't agree on how to do it.
And they don't have a majority to be able to do that.
Yeah, and I think we lack a visibility or the possibility to get something done before the election. It's next year. It's tomorrow morning, in other words.
But so do you agree with Mr. Rubini that actually a perfect brew is storming? Are we planting now the seeds for the next crisis? Or, as you said, is it just a normal cycle that after 2 years of recovery, then it slows down a touch?
It's not a normal cycle because a normal cycle, it's what we had in the 70s, 80s. You have an overheating. There is a very low rate of unemployment. There is inflation. You increase rates, you fight inflation. It's not that bad. I mean, because from the start, the unemployment is low. Now we are in a different situation with a so-called jobless or less dynamism on the labor market to begin with. But more important, the kind of crisis that we have been experiencing is a dual crisis. You have a banking sector because of a subprime, etc., and you have the real estate sector. And usually, when you have this kind of crisis, it lasts 5-6 years. People are much indebted. They don't act as if they were not. And the hot potato has been transferred to the public sector in many places, as we know in Europe.
But is this not the new normal? Because 3 years ago, I remember we were talking about the end of the world. It was going to be back to the 1930s. It was going to be a recession that was going to last for, 3, 4, 5 years. And actually, we got out of it pretty quickly.
Yeah, because a lot of things have been done. I mean, there were lessons from the 30s in terms of monetary policy, in terms of fiscal policy also. But that has to do, you have to do with the fact that there is a huge burden of debt. And that doesn't disappear in one day.
Yeah, very interesting. Philippe Darvizonnet, thank you so much.
Thank you.